And now let's get another look at NXP Semiconductor, NXPI. Those shares are up about 3% right now after posting a beat on the top and bottom lines, with the revenue outlook for Q1 slightly below estimates. Conference call tomorrow morning. Joining us now with what to expect is Angelo Zino from CFRA. Angelo, strong day for On Semi. A pretty good report from NXP. It's been mixed, what we've been hearing about automotive, which is one of NXP's key markets. But what are your takeaways here?
Yeah, no, you're absolutely right. So it has been, fairly mixed this earnings season, when you kind of start taking into account some of the comments made by Texas Instruments and others. But, overall, On and NXP looked relatively in line, especially the guidance also looked in line. But as far as NXP's numbers are concerned, I think the biggest takeaway, at least on the surface, is kind of what the channel inventory looks like. Stood at about 1.5 months. Long-term average is, or target is about 2.5 months. And the expectation, at least going into Q4, was that they were going to build it a little bit, closer to 1.6 months at the very least. So the fact that it kind of stood in check, I think, kind of at least gives you some indication that end demand looks like it's holding up fairly well, especially on the auto and industrial side of things. Especially in the industrial side of things, about 80% of their revenue is actually tied to the channel. So you kind of look at this, and I think, at least on the surface, it's a pretty good number, I think, for investors out there.
Semiconductors are complicated right now. On one end, you've got the AI plays. On the other end, you've got everybody else, microchip top executives taking this 20% compensation cut is usually a sign that they're concerned about cost levels based on demand headwinds. So on which side of this do you think we fall here with NXP?
Yeah, and I think microchip's kind of a good one to throw out there too, because they're a name that looks like they kind of stuffed the channel a little bit too much when you kind of look at some of the guidance that they provided in some of their recent numbers. So, in our view, and that's more of an industrial type play out there. In our view, NXP continues to be our favorite name, at least within the automotive channel out there, because of the kind of components that they sell within that channel and the content growth story that you have within NXP, the fact that we're looking at about 10% or so annual content growth here long term. So that said, even if you were to see some sort of kind of hiccup on the production side of things, this is a company that should continue to do fairly well. And given the flexibility, again, that they have within the channel, it's a name that we think can kind of navigate through some uncertain times, at least on the auto side, relative to some of their peers out there.
I wonder if we should be talking more about the role that China is playing with some of these chips, for example, so-called legacy chips, and basically flooding the global market, potentially pushing prices down, bigger revenue, bigger inventories as well. It's something the Commerce Department is looking at. Is this a real risk for an NXP, or no, not so much?
It is a risk out there, I'd say, for kind of some of these trailing edge type companies out there, some of the analog players. But that said, you look at kind of NXP out there, and the good thing about them is, they're a lot more kind of asset light in nature relative to some of the other kind of analog plays out there. So they can kind of leverage some of the foundries out there in areas like China and what have you, if there's kind of, a requirement in certain regions out there to kind of have an all China made type of car or,
okay.
Device out there. So NXP, we think, given their kind of structure out there, probably a little bit better position than others out there. But you're absolutely right, Morgan. It is a risk.